Okay, good morning, everybody. It is Monday, April 4th, 2022, and let's go ahead and get started. I want to really quickly review Friday because it worked out really nicely. So I just want to show you kind of remember what we mapped out and then show you what happened here. Remember that we were still in a really bearish market. We were rejecting right off our minor eye level up at 45.55.50 there. And so things were definitely feeling bearish. We had to see what they were going to do out of the open, but our targets were down into 45.26 to 27 there. That was kind of the first area of expected support coming out of the open. And then from there, we were targeting down into that 45.15.50 swing high, down into the major eye level at 45.13. So just coming out of the open here, we sold off right into our first expected support zone. In fact, came right into that previous daily low and basically held it multiple times. Came up and then we held right here was the back end of just about that 50% retrace of the sell-off right into that major swing. Came right into it, sold off, and this is where we were targeting down into 45.13. I made a call to short the back end of our first expected support zone, and unfortunately we came down and made a double bottom, which I did warn everybody in the trade room as we were making it that that was not a good clue for anyone who was short, because we very well could come retrace this whole leg back up. Unfortunately, that's what ended up happening, only for the market to then turn around and come right to our expected target down at 45.15.50 to 45.13 there. Again, using this level, you can see multiple times holding. And then once we broke below it, came up right into the back end of it to sell off right to 45.13 here. And then our next target was down to 44.96 up into 44.98.50. And the market came down to 45.01.50, just 3 points in front of our next target, and went ahead and ripped back to finish the day a little bit sideways here. Again, still playing around right in our 45.13 area, right off of our 26 to 27 area, and that was basically it. Kind of held and went sideways there into the close. And that's where it brings us here in the overnight session. Interestingly enough, where we are rejecting right now, let me just really quickly show you the overnight highs. We actually came up and tested 2 times here, exactly the 38% retracement. So let's zoom out here and take a look. So the high that we made a few days ago, up at 46.31, which again was one of our eye levels to the tick. I just can't believe how well this stuff works. Came right into it, and we failed, and we made a low on Friday down here, again at that 45.01 just about 3 points in front of that shaded zone you see down here from 96 to 98. If you put a Fibonacci leg across there, look at where the overnight high is. It's right at the 38% retracement of the whole sell-off. So very interesting to note that we're holding the fib retracement level to the tick here in the overnight session. That's just the first thing I want you guys to be aware of coming into this morning. It seems that there is an attempt by the bulls here to try to break out, but right now we're holding right at the 38% retracement. So let's go ahead now and jump up, and we'll do our higher time frame analysis. And to be quite honest, for I think a little bit of time here, the higher time frames have not really changed. But let's go ahead and jump up. Again, the yearly here, you can see we've just came all the way into 50% of the previous year and got a really strong recovery, and we're back up to the highs. So things from that perspective look pretty strong up there. But let's go down into our quarterly chart. Still have an argument for that bearish divergence from the all-time high up at 48.01. And with this current quarterly candle that will close at the end of May, there's really not much to say. We've just kind of been trading up and down within that candlestick right there. So no new information up top. On our monthly chart, the only thing I can say is we're still have these major wicks to the downside. If anyone was in our study session last week, we talked about the importance of these candle wicks, and you can see that for 3 months now, we have some pretty strong recovery, leaving these shadows here down at the bottom. So those are somewhat of you can interpret that as somewhat of a bullish omen for the future there. And on this new monthly bar that again just opened maybe on Friday or the day before that, um, there's really nothing new to add to the picture. We haven't broken out through past the previous monthly range, and there's still a lot of time for this monthly bar to develop. With that being said, there's really nothing else new to add to the picture here from the monthly. So like I said, these higher time frames really haven't changed. The final thing I want to say up here on the higher time frames is on our weekly chart, we do get a very clear bearish divergence from last week's high. And remember, we talked about it last week, back when price was up right at the high that I'm pointing out right here on that bar. So as that was happening, we went ahead and drew it in there and said we need to watch and see. We need to see some agreement with the other time frames. And we said down on the daily here, the daily there was an extrapolation out that you could argue for that divergence, not necessarily what I like to do, but there is an argument. So we do have a daily and a weekly bearish divergence now from the previous weekly high. So I just want to point that out. It's now official. That weekly candle has closed. We've got a new candle opening. Of course, we need to see what happens with the new candle because the RVI could continue to develop, and maybe this could end up being a false signal. Again, going back to 2 weeks ago, we talked about false signals, and this would be a potential false signal, so we need to continue to watch this. Same thing, well, the daily, I guess, is an official signal now. So we've got those up there just as warnings. And I think that's basically it for the higher time frames. You can see that we're pushing up into, let me see if I can zoom out here. The daily might be good enough. We're pushing, well, let's go to the 4-hour. We're pushing up into the boundaries of that next structure zone. So the high of last week, remember, was our eye level at 46.31 there. We are basically right at the top of this structure box here, right? So we had about 45.77 up to just about 46.35, give or take a few points. So that we basically came up and tested the top end of that box there. So if the bulls do come up and break through the highs of last week, the next target should sound familiar because we talked about it all last week, is up at 46.58. So 46.58 is going to be our target to the upside if they can get through there. And then getting through 58 is going to bring us up into that next major box, the high of which is up at 4,700. So keep those levels in mind if we get some type of major bullish follow through here. And outside of that, if we do break down below Friday's low, the next major box is down. Well, the boundary for the next major box is going to be all the way back around 44.50. Again, give or take a few points there on these larger structures. So 44.50 would be my larger target if we break the low of Friday, the low of Friday being 45.01 quarter. So that's kind of I guess the closest things that we can talk about from this larger perspective. And then keep in mind that if the bulls do push this morning and they get through that 38% retracement that I mentioned that they're having trouble with right now, there is a dividing line for the two structures, essentially right around 45.77, which was that major area of where we failed a few months ago. And it's also the major wick from, I believe, Thursday's low or Wednesday's low there. So if we push higher, that swing low is at 45.74.75. And then remember, 74 quarter is our major eye level. So if we get through the overnight highs here, 74 quarter would be my first target to the upside. A little bit further, we have some contention zones all throughout here. And then it's right up to that 46.31 minor eye level, and then 46.58. So let me go down into my 60-minute chart here. and see on the 60-minute perspective if there are any other levels that we want to pay attention to coming into the open. And then we'll really quickly go down and take a look at the 10-minute chart, because the 10-minute chart has a bunch of little levels over in here in the overnight leg that I want to talk about. So let's see here. We've already kind of talked about the major zones. So let's talk about everything else that we have in between. For those who have just jumped in, I will go ahead and repeat myself here. Up above, if the bulls break through the highs of the overnight session, we've got a retracement of this whole leg down from our minor eye level at 46.31 all the way down to our Friday's low. We're stuck at the 38% retracement right now. If the bulls jump through here, we're looking at, let me get rid of that line, we're looking at this 45.65 to 45.66 little zone right here. This would be 50% of the whole sell-off. It's also our minor eye level, and it's also been a support and resistance zone that we've been watching for a while now. So that would be that first potential contention zone if the bulls get through the highs of the overnight session. A little bit further brings us to that level I mentioned at 74.25, right where that major swing low is, and then that would be that dividing line between the two major structure zones right there. Again, interesting to note, we came down, bounced right off of that dividing line, and came down and bounced off of it as well 2 days last week. So that would be that next zone. A little bit further up, and we do have this 82.50, 82 area, and then from there 90.50, and from there 4600. So it's almost like every 5 or 10 points, but these are all the little zones that make sense for resistance coming into the open. That 4600 as well, I'm going to go ahead and highlight it. Very important little area right there. So let me get that onto all my charts, lock it in place. And then from there, 46.31 would be there. And again, for most of you, you were here, but there was about 4 of you who just came in. So let me just repeat. If they get through the highs of last week, the major area I'm targeting is 46.58. However, 42.50 is almost right in between. That could potentially have a reaction. And then once 58 breaks, it's a nice clean push right into the 4700 area. Remember, there are some minor levels to be aware of right around 4700 there, and that would be those three clustered levels right there. So those are the targets to the upside. A little bit further would be all the way into that 4740 area. On the flip side of things, if the market does continue to pull back and the bulls cannot get through the overnight highs, or even if they do get through the overnight highs, but we get a major rejection and the market starts to pull back, let's take a look at the levels that we have below us to be aware of this morning. And I want to go down into the 10-minute chart and zoom in a little bit. So let's take a look. Here's Friday's low on the left. Here's the overnight highs up on the top right here. Again, that's the 38% retracement of the whole sell-off from the last week's high down to the last week's low. Having a lot of trouble right there. And then there's Friday's close right there, that where we're bouncing right now off that white line, 38.50. Again, if the bears find strength here and pull back this morning, we've got a couple little zones below us that you need to be aware of. So we've got that 31.25 up to about 32 there. That would be just about a 38% retrace of this leg here from Friday's low. A little bit deeper than that, we've got just about 26 to 27. That's 50% of the whole leg. It's also one of our minor eye levels, 27, which I had to add back on to my short time frame charts. So just be aware of that. And then a little bit further, we cannot ignore the 61.8 level at 20.25, 20.50. Time and time again, we see the market pull back into this level and get a reaction to the tick. So don't want to ignore the fact that that's sitting right there. Any further than that is going to bring us down right into this 45.13 major level and then the previous daily low. So be aware of these smaller pockets in the market if the bears pull this back here. And then let's go back to the 60-minute and look at what's below all of that stuff. So if the market does end up getting through the lows of Friday, we do have that 96 to 98.50 level that's still there. Remember, that was our target back on Friday, was 98.50, the major swing high, down to 96.75. I still think that there's a potential we could see a reaction over in that zone. So I'm going to go ahead and expand this box out, if I can actually select it here. I'm going to expand this out to cover today. So if they do get through the overnight low, I still think there's a possibility we could see something go on right in there. Or if anything, a break through that level and a pullback to come right into it for a rejection. So still watching that as like last week. And then everything else from last week is still in play down at the bottom here. We've got a major swing at 81.25. So if you were in our pre-markets last week, I think a lot of these levels are just the same thing. I'm going to expand this one out as well. So the next pocket, if they get through that swing high, is down into 44.74 to 44.77. Remember up top we had 45.74 to 45.77. Don't get mixed up. This is the 4,474 to 4,477 down here. And then we're down into the next minor eye level at 44.67. Then from there, we still have this swing at 58. And then it's down into this pocket between 52 and 54. And at that point, we're now 150 points lower. Let me see. That might be all we need to talk about this morning. So where are we at? We're at 45.50. That would be down to 44.50. So another 100 points down. If the bears are super strong and there's some type of major correction here, we still have numbers down into 44.30, 44.13 to 44.15, down into that 4400, 43.97, and then a little bit further down into 43.81 and then 43.67. So those are all the major expected support zones down below. And then from the daily perspective here, keep in mind that we are holding below the previous daily low. We're still above the previous daily, we're holding below the previous daily high and above the previous daily low, and we're right around the magenta and the orange levels right now. So I don't know if I'd necessarily be aggressively trading right around here. What I'd like to see is either holding above that orange power level to the upside to be more interested in buying the market. And then if we do see a pullback to get below the orange power level and below the magenta line, I'm now more interested in looking for shorts down into the levels that we talked about. Just from that very general scheme of things. Remember, we're still trading within Friday's range. So ideally getting outside of that would be a better thing for me. With that, all of that being said, I think that's it for this morning. Of course, we'll be back on Thursday morning to do the same thing. And, I'm not sure if we're going to have anything new to say on those higher time frames if we continue to chop around. But for now, we've got our levels. And outside of that, I'm not going to talk about any specific bias this morning. What we'd like to do is, again, get outside of the previous daily range, and breaking outside of that is going to open us up for those larger targets that we talked about. So have a great rest of your day. We're going to jump down to the members section and get to the shorter time frames here and see if we can't get some trades. Notice where we just came up and rejected from 45.46, one of our minor eye levels, and getting a little bit of a pullback at the moment. So have a great morning, and I will see everybody on Thursday morning. Take care.